Hello and welcome to M&A Murders and Accusations, the good, the bad, and the ugly of selling your business. We dig into what you need to know and how not to kill the sale of your business. Now here's our host, Rick J. Krebs, Mergers and Acquisitions Advisor.
Hi, everyone, and welcome to our podcast today, where great decisions start with trusted valuations. I want to share how we get started at Biz Value. My name is Rick J. Krebs, CPA, valuation expert, and principal at Biz Value. I've been selling companies for going on 13 years now, and in the past, people would want a valuation. They would approach me. They were looking to sell or buy a business or had a divorce or looking for tax planning, and so they would come to me looking for a valuation, and I would find a CVA or find someone who did them. And I would send them over, and my clients kept coming back. They're like, Rick, we just need a number. We just want a baseline number that we can rely on to make a good decision. And, after a few times after they're begging, finally, I started to do one or two. I'd pull from a comparables database and start to, give them a number, a range of value. And it just kept happening more and more. And I saw a need. I saw that there was a need for good valuations with rock solid numbers that they could rely on, that were affordable, that didn't take 60, 30 days to do, where they could have an answer in a few days or a week or less and get them where they needed to be as a springboard. So that's how we started Biz Value. I had subscribed to some other services where the clients were putting in their own information, and I just decided it was, kind of garbage in, garbage out. Sometimes the data were manipulated to where, they would change the data until they got the number they wanted, but they needed a good third-party independent valuation done by an outside CPA that gave them a good number from which to make a good decision. And so wrote software. I looked at some other ones, and I actually subscribed to one, and I just didn't like it. There were no comparables given. If I were ever asked by a client where the number came from, I couldn't really tell them. They were just, it's an algorithm in the computer. That wasn't good enough for me. I wanted the empirical evidence to support values. So that's how the company got started. We've been doing it for almost 13 years now. So we provide affordable valuations, good rock solid numbers, and they get you where you want to be, whether you're buying, whether you're selling, whether you're a partner buyout, looking for estate planning, but it's a good solid number from which to make it a good decision. Okay. Now we're going to talk about what Biz Value is, what we do. So at Biz Value, the valuations are designed for planning. I have three different types of valuations. We have a standard valuation, and the standard one is for people that just want a good number. How it works is they hop online, pay us a credit card, complete a questionnaire, upload the documents, financial documents, and then we do the rest. And we provide a 31-page report. We provide the comparables which are used. We calculate value based on 5 different metrics, and it gives you a good number. The second one is a premium valuation, a little more expensive, but still not bad at $7.99. And that one includes a planning session with myself. It also includes some additional calculations of a low range and high range in value. And it includes a gap page, which talks about the gaps that you have, your profit gap, the difference between where you're at, where you could be, and what that would do to value, wealth gap. And so it includes some additional information for those people that are using the valuation for planning purposes, whether it's estate planning, whether it's financial planning, exit planning of a business, but it's designed to do that. And it includes the additional time, the additional calculations, and it includes a phone call to talk about next steps and what you should do. The third one is a comprehensive that contains 6 different metrics for valuations. So what I do is I calculate your value using each of these 6 metrics, and then I assign a weighting to the ones which are most applicable. With this one, it also includes the complicated calculations of discounted cash flow. That is one for people who are looking for something that's a little more robust, and it includes that additional way to calculate value. I want to talk to you about one of the big takeaways from the valuations. When I meet with clients, oftentimes as we go through the valuation, they don't understand something called multiple arbitrage. And what that means is it means that based on your multiple, let's say that your business has a 4 multiple of EBITDA, meaning we calculate your EBITDA and then you take 4 times that, and that's the value of your business. So what that means as a business owner is if you take and you increase your EBITDA $1, you're going to get a 400% return on that money in the value of your business. I don't know about you. I'm not that great at stocks, and I can't think anywhere I could pretty much get a guaranteed 400% return on my money. But as a business owner, that's one of the big takeaways usually as we're going through the report. They're like, you mean EBITDA is everything? I mean, I can increase my value 400% by just increasing my EBITDA. Oftentimes that's something that's an epiphany for the business owners. The other thing is they don't really understand oftentimes how discretionary expenses work. So when you do your tax returns, you're looking for deductions. You hire a good CPA to help you find deductions to minimize your taxes, right? Well, when we do valuations, it's the exact opposite. What we're doing is we're looking for discretionary items, and I need your help. I have you fill out a questionnaire, 25-question questionnaire, and I need your help in identifying what those expenses are. And oftentimes, for example, they're automobile expenses that are run through the truck or run through the business, automobile or trucks. The other thing is I see health insurance, life insurance premiums. I see all kinds of business deductions, which are valid business deductions or taxes, but they're not deductions that the new owner will have. We're able to take those expenses out from your net income, which boosts it up for the EBITDA calculation and ultimately gets you more value. Thank you.
Thank you for attending our podcast. We invite you to join us for future episodes of M&A, Murders and Accusations, the good, the bad, and the ugly of selling your business. You can also visit us at www.bsalesgroup.com or email Rick directly at rick@bsalesgroup.com.